everybody. Welcome to Market Mavericks. Hope everyone's doing well. Of course, I'm joined by the gentlemen and the Mavericks themselves. How are you guys doing today?
Right.
Good. So, first and foremost, it's been a couple weeks since we've done this, and the last time I think Bitcoin was in the 80s, and here we are over 100,000. The stock market was down 20% lower. And here we are, 22% on the S&P, almost 30% on the NASDAQ higher. And give me your rough synopsises, guys. Like, what's the culprit here? Is this just simply trade war back off kind of stuff, or what?
Mike.
I was going to say, Scott, you first. Well, let's see. This is the key thing. It's the number one question in the entire planet right now in all markets. Was this just a little dip to buy in all risk assets, and is it just going to go up from here, no problem? Or is it going to roll over for a recession and a decent correction, something we haven't had since that bottom in 2020? I'm more facing the latter. I think that's the key thing to remember is everything went down together, including bond yields. The low and the 30-year was about 4.50, and today printed 5%. Everything bottomed around the beginning of April. Everything went straight up together. The key thing is Bitcoin led in the way down and Bitcoin led on the way up. The key thing right now is on the year, gold was up about 33%. Now it's about 22%. Bitcoin's 10%. So gold's still winning. And the key thing I like to watch is if this stock market can keep going, then everything's fine. The problem is the Fed can't. Inflation's too high, and they see that the problem is we're just creating too much wealth and too much inflation. So that would take the Fed out of the picture and keep bond yields high if we keep going higher in risk assets. And then there's that issue that yes, we have this real relief. Then tariffs were 150% on China; they're more like 30%. But the key fact is, U.S. tariffs on the rest of the world, which is very dependent on exporting U.S., are the highest in about 100 years. So I'm tilting towards the macro big picture that this is going to roll over. And it should happen soon. And part of the reason is because we left a pretty significant gap on that weekly chart in S&P 500 on the way up. The last time we left a weekly gap on the.
Oh, you're breaking up a little there, Mike. We're losing you
Mike
from the money show there. So, all right. So jumping into this, Scott, number one, do you believe that this rally is real in that it has more legs than this and we'll see new all-time highs? And is this simply that people are conditioned from like the bottom looks almost identical to COVID, right? So the question I guess I would have is this people getting programmed so many times that it just goes straight back up?
Yeah, this is as V-shaped of a V-shaped recovery as you could have. And obviously I was still a little bit hesitant until we broke the level where we were before Liberation Day, right? I mean, now we're trading back above Liberation Day, which was basically right here, a few percent up from there, above the 50 MA, above the 200 MA here daily on the SPY. I mean, you take the look at the Qs, I mean, way above, obviously, that level. Yeah. Hard to deny that this is a V-shaped recovery that's already sort of broken out. So I can't say we're zooming off to new highs, but at least in the charts, I don't see evidence that there's a reason to make new lows. Now, I wouldn't be surprised for some serious retracement, but the velocity and power of that rally, to me, still says that people are looking for literally any excuse to buy. And in that environment, it's just hard to push it down immediately. Like this didn't disillusion people in the way that I would have thought it would. I mean, it's crazy when you rationally think about it. Basically, like Trump created a massive problem and then has minimally solved it, arguably with worse situation than before in some places, and the market rallies, right? So create a problem, fix it, even though maybe it's a suboptimal fix, and things go back up. It just feels like people are still really, really euphoric. And so that means eventually there'll be a top. It just doesn't feel like this is it.
And it feels to me like looking at these type of moves, it shows me that there's still a lot of liquidity in the system. We're always thinking, oh, people are struggling. And I think there are a lot of people that are struggling, let's be fair. But there's obviously a lot of people that had money on the sidelines that were ready to dive back in this market. So there's still a lot of liquidity to sop up there. And now the Fed is getting bashed by Trump to cut rates, right? And so it's really kind of a weird thing. And then we even got like PPI and CPI data. Where is the inflation that we're supposed to be getting from these tariffs?
I think that's just delayed. I just don't think you would see that yet. Maybe I'm wrong. I'm not a tariff expert and not an expert on supply chains, but I think that would just take a couple months to funnel through the system.
Mike,
from what I've heard.
Mike, you've been calling for deflation. Today we got a negative print on PPI. Is this the start? Oh, we can't hear you, buddy. Are you muted maybe?
So I should have fixed a connection problem, and probably better if I take myself off mute. But yes, I think so. First of all, the lessons of history is we always have deflation after significant inflation, particularly when it's on the back of artificial money pumps, which we did have. And the key thing that my chief economist, Anna Wong, pointed out today is most of inflation numbers are 2/3 services. And services data started to tip downward, certainly from a travel standpoint. They're all heading lower. Just look at Ubers and travels and air flights and things. They're all tilting back downward like you'd expect in a recession. Now, yes, some of that's tariff related, but I think this is a classic bear market bounce. And it's amazing how quickly sentiment has shifted. But it's in face of what's happened. You see what happened as we bounce. We completely taken Fed easing out of the market. Fed easing was, there you go. And there's, see that gap. That's just a classic, that's what you're supposed to get in bear market. So I'd say prove it. And this is a level that, we're at levels to prove it. The S&P 500 has got to stay up on the year. The key thing is you look at what's happened is everything's gone together on the way up. The dollar, Bitcoin, cryptocurrencies, S&P 500, except the dollar. The dollar is still a dollar index, DXY or Bloomberg Dollar Index is still down about 5% a year. That means, and that's a horrible sign. When you hit 5% in that long bond today and the dollar's going down, yields are going up, ain't a good sign. It means people are selling U.S. assets. Now, for now, I think this is a pretty significant short covering rally. You really saw that, I think, the altcoins and cryptos, because I think those are short bait. When the tide goes out a little, the tide hasn't gone out yet. We just had a short correction. I think it's the warning. But then you look at things, my key indicators. Crude oil is collapsing. Why? Partly because there's too much supply and there's no demand. And gold is taking off. Why? Because there's significant demand for this alternative asset as the world kind of tilts towards a recession. And the rest of the world's got a big problem. And you can see the pillar of inflation. Sorry, you lost me again. Well, the final the final pillar of global deflation, which is really, you see that in gold rallying and crude oil collapsing, is the U.S. stock market. It's got to stay up. At 2 times GDP, this is a sign that, the Fed can't ease if the stock market goes up. We've turned on the austerity. That's starting to kick in, hopefully trying to reduce some of that unprecedented fiscal spending. And the tariffs. One thing, the key thing to remember about tariffs is the key thing they do is they hurt corporate profits. Why would any company go out of their way to shut a plant in Podunk? It's very politically incorrect. And offshore imports from China or any place else is for profits. And that's the key thing we're seeing and from what our chief strategist, Gina Martin, says is, yes, we've had good profits in Q1. Q1 didn't really matter. It's all the profit it mentions are lower. And you saw what's happened with Walmart recently. So I'll end with this. One thing I love about Walmart is Ed Yardeni pointing out this a little bit when they had earnings last time, is they traded at 38 PE. It's our retailer. The average PE for Walmart for the last 20 years is 20. It's really expensive stock.
Really, it is.
Yeah, I mean, Walmart, I think that it was the CFO today, maybe it was the CEO who made the comments that prices are definitely about to go up at Walmart. He said it very definitively. So
due to tariffs,
so if you want to know about the delayed sort of response to tariffs in the system, Walmart raising prices is a pretty big signal that the consumer prices will be inflating, at least.
Yeah, no, I 100% agree. And I think that caught my eye today. And I think part of it too is just to think about how things worked, right? So we had everyone knew that tariffs were coming. So these businesses bought a ton of inventory, right, in the first quarter of the year. And so they have a lot of inventory that they bought at a lot cheaper levels, and they're able to sell at still approximately the same price. But it's the next leg of inventory that they're going to be buying that will have higher prices, and that will eventually get passed along to the consumer. The other thing that I thought was super interesting is we got retail sales today, right? So retail sales came in and it was actually better than expected. But if you look at core, but core, right? Core retail sales, which is taking out automobiles, was actually much worse than expected. And I think that's fascinating because what that tells us is people rushed out to buy cars before the tariffs hit, which inflated the retail sales, but everything else took a big hit. And I think that's a warning sign for the consumer.
They were smart to do that, by the way. That was a good savvy move by those people.
Yes, no doubt. All right, so let's turn our attention to the crypto market, Scott. Bitcoin, talk me through what is going on your chart. I'll bring up your chart here so we can take a look.
Sure.
Are we headed for new all-time highs in the short term? I mean, I think we all agree. I think even Mike agrees long term it's going up. The question is short term.
I mean, it depends on how we define short term. Right now, it does look like, we have dropping volume and a consolidation pattern after, making a new series of highs and lows. So it does look really good to me. Still, though, kind of below this 106 level, we haven't had a day ever close above that level. And that's kind of where we got rejected. So I feel much more comfortable there. Listen, like in a perfect world, I would love to see Bitcoin come back down into the 90s or the high 80s and gather strength and head up. But from a technical perspective, I mean, usually on a daily chart with Bitcoin, when you start to hit overbought, which you're finally seeing here, that's a signal of strength, not a signal of weakness, as long as you don't have divergence. You have the 50 and the 200 MAs both pushing up hard. I mean, the chart just looks really good. It's hard to deny the chart looks really good. That said, I think what was most interesting on this move, if we're talking about the crypto market, was that Bitcoin pushed up and Bitcoin dominance went down. We have not seen that since cycles of the past when we were truly in bull markets, where altcoins outperform Bitcoin when Bitcoin pushes up. Largely, obviously, that was the back on Ethereum, on the back of Ethereum making a, 40% move in a matter of days. But I will say, when I look at Ethereum now, I see bearish divergence and massively overbought, which is a signal to me that it's about to be Bitcoin time, and maybe this little altcoin run had its moment, which we always see. They have their run for a week or two, and then it cools off for quite a while. You got to time it perfectly if you want to be in them.
Do you think that one of the last conversations we had was where the stock market had been punished, but Bitcoin was showing relative strength. But then the stock market ralled and Bitcoin moved up even more.
Yeah.
So
think about where it was on Liberation Day. Bitcoin was at $82,000 on Liberation Day. So it is up, 25% over where it was when Liberation Day. Stocks are up 2%.
Right.
So it is outperformed. Maybe it led, but it's also outperformed, which Mike will tell you and may be accurate that it's because it's higher beta. And when you get a bigger move up, you'll get a bigger move on Bitcoin. But Bitcoin, to me, performed like a really well-managed hedge fund on this entire Liberation Day move. Like it had less downside and more upside. I mean, that's what you want from an asset if you're in it.
That's true. Yeah, no, I think that's 100% right. So, and Mike, I'll let you answer in just a second. But I guess the question is it partially a safe haven and then partially a risk asset? Then, or is it one or the other? Like, what's going on here?
So I did enjoy republishing something I've been publishing, as Scott knows, for 7 years. Digital gold or leverage beta. Sometimes you want it more for digital gold. Other times you want it for leverage beta. It's completely, almost unequivocally right now, leverage beta. The 16-quarter correlation from Bitcoin to the S&P 500, I use 16 quarters because it's a 4-year cycle, is 0.67. The 16-quarter for Bitcoin to gold is basically 0. It's completely going up on the back of the kids. It's a good leading indicator. So I will state for the record, I fully expect there's a big risk that Bitcoin could drop a 0. I will repeat it, not saying it can't make new high. It's the highest ever versus the S&P 500, and it's got a classic crowd effect thing going right now. I remember this clearly in 1999. I'm at the Money Show. I was just talking to someone I see here every year. He's 68. He remembers trading well. He thinks exactly the same thing. It's just, I've seen this before. You don't want to join the crowd effect here. And then I just saw from already I was hopping on. I got an IB from a colleague at Bloomberg that state of Wisconsin just started selling some of their Bitcoin ETFs. Now, I don't know why that's happening, but I will point out this is not the place to be joining the crowd. I think it might work out. It might be risky, but I took the risk in 2022 when crude oil was above $100 to put 48 hours as an outlook. I was way wrong early. I was an idiot for a while, but it was just where supply and demand is going. And I'll be publishing tomorrow. I'm not going to put 10,000 back on it again, but this is where supply and demand is going in this space. There's unlimited dependence, competitors, whatever you want to call it. There's unlimited hubris and excesses in this space. It's not a space you want to get long. And I think if the stock market keeps going up, the whole crypto space might be okay. Bitcoin will be better. The whole crypto space is down, or somewhat. Bitcoin's up. Yes, we had a great year last year. So I'm looking at this as potentially significant peaks. I just don't know what's going to be the catalyst for it to go lower. It's just the whole thing. Like I said, I still think we might see a 20% down year in S&P 500. Now, if it keeps inching higher, I might give up that soon. But this is the first move higher, the first sharp rally to get unchanged in the year.
Yeah, and I think it's important to recognize that if you go back to any significant bear market, there's always the first bounce is always usually the biggest because people have been conditioned to expect a new all-time highs. It's later in the cycle that you get the smaller bounces because everyone's just selling into it and seeing it roll over. But one of the things that's concerned me, Scott, is that, usually the crap coins run at the end, and we've started to see fart coin and all these other ones starting to go. And so I've said to myself, is this meaning the stock market and risk assets are getting to a point where we're going to see a pullback?
I think that they run at the end of that altcoin part of the rally before you go back into Bitcoin and it runs. So it depends on if you're in the bull market or a bear market. So my mental model now has finally switched for the first time, I think, in years to buying dips versus selling rips. And so to me, it's just the way that I perceive the market right now. Like, I want to buy Bitcoin at 88 more than I want to sell it at 100 personally. I'm not saying it'll get there. I want to buy Ethereum if it drops 25% more than I want to sell it because I don't expect new lows. I could be completely wrong on this, by the way, but that move the other day got me interested again, that there really is new money. ETH could not have gone up 40% and other altcoins 50, 60, 70% all at once without new money in the system, because meme coins also went up and Bitcoin also went up. So that was not the washing machine that we've seen of the past and things going in and out. So it just really sparked my interest there. So I guess that's how I view it. Yeah, these things run, then they'll cool off. Bitcoin will either consolidate or go up. Maybe Bitcoin goes down. But yeah, I think that brief altcoin periods are very brief, and you gotta really be on top of them if you're going to make money there. It's more of a trader's paradise than, I would say, 90% of those things are not investments,
But I piggyback, and I think that's the key thing, remember, it's a trader's paradise, but I'm starting to really get concerned about the systematic risk in this space. Meaning when you have people adding it to your treasuries, this is an asset with volatility that's 3 times the gold or 3 times S&P 500 and expecting it just to be a store of value. Bitcoin has a history of 50%, 60, 70% corrections, particularly when you get it this bullish and this high. The key thing that's been striking me for almost 2 years now, and is, well, at least a year last year, is I've been looking at this Bitcoin gold ratio forever. It's the same as 2021. It's down 10% on the year. Yes, it was pretty extreme last year, but that was the pump that I think put in a pretty long-term peak. Yeah, we might get a little higher, but overall cryptos are heading lower. And we've had the bounce in the stock market. And remember what's happening with U.S. I mean, the rest of the world is doing fine. The U.S. stock market's still the highest ever versus the rest of the world. I think, as you see in the dollar, people are getting out. So we've had a little bit of a reprieve. And I look at it, things like the Bitcoin gold ratio is still telling me this is a problem. And I'm worried about systematic risk.
I will say right now, and I actually pegged this morning. If you could just pull my screen up really quick, Gareth. Like, I saw this on gold when gold was trading at 31.78 this morning. And I was like, wow, gold is hitting the 50 MA here on the daily perfectly and putting that long tail down. Obviously, I didn't know in the morning that it would continue to go up. But obviously, like, gold looks like it's done correcting here, or at least in the short term. And that should be a signal that at least in the short term, we're going to get some retracement on risk assets.
That's what I thought too. And to me, I said to myself, if gold goes up, does that mean the stock market starts to pull back a little bit? And let me just show you this. It's pretty cool because this matches up with your trend line. But I'm more trend lines versus moving averages. But pivot high here, boom, and then look at the upsloping trend line right there, and it reversed. And then your moving average as well. It was a beautiful technical support area on gold. But I agree. Gold starts moving up. That's a safe haven asset where people go to, and it does make you wonder. The other thing I got to bring up to you guys is, why is the market for now, and maybe this is more for Mike, but maybe both of you guys, the 10-year yield pulling back today on PPI. But I mean, this is up like 40 basis points since May 1st. I mean, that's like a 40 basis point
bond traders aren't buying it. Go ahead, Mike. Yeah, I mean, it's
just... I raised my hand because guilty. But the biggest thing I've been wrong on is expecting U.S. 10, long bonds to be the next big trade. So far wrong, but I think it might be one of the biggest trades, partly because what it is, remember that space is the most leveraged market on the planet. I used to trade these things. A lot of my customers were never less than 20%, 20 times leverage when you trade treasuries, partly because you can. So I think we're still in that space. A lot of the money people are getting bullish and getting stopped out. We're having issues with obviously too much supply. The key thing is, don't underestimate, if treasury yields go up, that's a huge headwind for U.S. stock market at 2 times GDP. And that's part of the reason that we have high treasury real rates, is because risk assets are so high. They have to take the Fed out of the picture. It's just the wealth effect is too great. So you see the lose-lose there today was once that long bond hit 5%. I think we saw the duration buyers come in today. 30s. It was the same. Yeah, 30-year, the long bond. Yeah, it hit 5% today. The thing about if the U.S. loses control of the 30-year, there's few better ways to rip the base off of the stock market. If you can lose control of the bond market, you got a lot of selling to do. I mean, there's a lot of risk there. Now, so maybe it's some reflation, but this is also the stated goal of our U.S. government to lower bond yields. And with the cool that there's a problem in the bond market. Is there a problem in the bond market? It's okay if stocks are cheap, but they're the most expensive in 100 years by some measure. So I'm really concerned about the whole systematic risk space. And that's why I think and that's where gold's picking up. That's still very bullish gold. Still think it's been one of the best performers this year. It got way too expensive at 3,500. Really good support at 30,000. You saw some good support levels. But remember, it's only May. Now, if we were seeing these kind of results and it was like November, great, but it's only May. We've had, like you said, the first dip in a bear market you're supposed to buy. We've got the rally. Is it going to continue? And we're going to just go back to state by the end of this year. Everything was great. That would be wonderful. But that means probably no Fed ease. That means inflation's not going down. It means that some of the stated goals of lower yields is not going to happen. It's a very scary situation for me.
And so with the yields going up, it implies that the Fed is going to be less likely to cut rates. But yet we're seeing inflation numbers that are pretty reasonable, right? And so again, just trying for everyone watching out there, connecting these dots. Can either of you guys connect so is the Fed just not going to cut this year now? Is that what it's telling us? Or is it telling us that the economy is going back into an awesome mode, or that there's going to be inflation and they can't cut? They're not going to be able to.
All the above. Well, so right now, that's part of the problem is every time you see the risk stock market goes up, Fed easing comes out of the picture. And Chairman Powell said it. Can't really ease in this environment. We talked about this a year ago. They made the mistake of easing and adding to it and doing more easing when the bond market told them to stop. What did they do? They goosed the stock market to the highest levels ever. They added $12 trillion. They helped do that. And now they realize the mistake of that. They can't do anything right now, even with the jawbone from President Trump. So I look at this as a bit of a lose-lose situation. And here's the key thing, the bottom line, I think, to get the Fed to ease and bond yields lower, the number one factor now, what's left over is the U.S. stock market, because even crude oil's deflating rapidly. And the key thing, remember, though, always remember, first of all those data, everything you see are lagging and way lagging the market. But when you get a recession, you're going to get deflation, which is still my main case. Now, we've had it, we're getting in China, that 10-year yield of 1.67 versus 4.5% in this country this is what happened in Japan in the 90s. I think it's where we're going. That's why the stock market is so important. That's why Bitcoin has to stay elevated, where the systematic risk is the trigger. That's why I can't be long risk assets. I can't be bullish. I keep sticking with gold.
Yeah, I don't blame you. I think and this would be my question to you, Scott, is you look at what yields are doing, you look at, and by the way, I don't know if you guys have been paying attention to these tax negotiations about this new bill and everything, but they're not cutting spending. There's
they're going to cut taxes.
Yeah, they're going to cut taxes, but then they can't people don't want to cut from Medicaid and all this stuff. And I think we see the writing on the wall, and all of this probably is just a bullish sign longer term for Bitcoin, right, Scott?
Yeah, I mean, listen, the best argument for Bitcoin, the most correlated chart that you can take a peek at is M2 money supply and Bitcoin, right? It's liquidity. I don't have it up right now, unfortunately, but it usually lags by a couple months, and M2 has started firing on all cylinders to the upside, and Bitcoin usually follows it. There's a lot of people who articulate this much better than me. I had Bill Barhyde on my show this morning, and he really dug into it, but I am definitely, because I'm a programmed Bitcoiner, I guess, am of the belief that they will print, baby, print. They will never stop printing, right? They'll have these moments of lull like now where they try to be responsible, but at the end of the day, there's going to be a lot of holes in the ship and they're going to have to patch them. And the only way to do that is to just print money. So I think that today, actually, we saw the announcement that officially the debt service is more than military spending. I think 1.12 trillion versus 1.1 trillion, and yields are going up. You can't tell me they're not going to have to print money to refinance that debt and afford everything. So I think that is what's coming. I do think that's generally good for Bitcoin until it's bad for everything. And maybe that's good for Bitcoin as well. But that's an argument of whether you think that will hyperinflate, totally different conversation. But I do think that they will print, and they will print a lot. And I don't think it'll have much to do with the Fed's cuts, to be honest. I think it'll come that it's not going to be the Fed necessarily that really matters at this point.
So going to that, so we have Bitcoin, we have gold. I agree on both of those. One of the things that I've been looking at is silver, platinum, and palladium. Now, obviously, those are industrial metals, Mike, and so it has to do with demand in that respect. But they're still extremely well. Silver's not so rare, but like platinum and palladium are what 20, 30 times rarer than gold. Would that be a place like that's kind of what I speculated? Yeah, it's industrial, but it's also so rare. Could it be a good place to store some capital for appreciation if the dollar keeps going lower?
Gareth, full disclosure, I'm impressed. That's going to be the first line of my leading story tomorrow is gold has 3 companions, silver, platinum, palladium, and cryptocurrencies, there's 15 million of them. That's the competitors to gold, silver, platinum. The key thing right now is the central banks are buying gold. And the lessons of history is you buy gold. You use gold as reserve assets. Things like we learned with William Jennings Bryan in the past. Silver doesn't work. Platinum, palladium are industrial metals. They're all industrial metals. And what's happened with industry? The rest of the world's facing significant tariffs. This is a paradigm shift, most notably China. So that's why I think they're fine. Silver will be fine as long as gold's going up. It's like I look at the rest of the cryptos. They'll be okay as long as Bitcoin's going up. And that's the difference is Bitcoin's a highly speculative digital asset. And it's a pile-on effect right now where you have to be careful. That's, what wasn't in 2020.
What happens if we start seeing, as many are pointing out, massive buying of Bitcoin by institutions or central banks like you're pointing out with gold? I think it differentiates Bitcoin, obviously, from the rest of the crypto market, which I do agree is a rising tide, floating all the shit.
Yeah, so the key thing is I've been pointing, what you see in palladium and stuck in a range. I pointed out about platinum a year ago. It looked just like cocoa did a year ago, stuck in a narrow range. It's still there. It's stuck. It's only been going up on the back of gold. And the key thing is I stick with this key theme is this year we've had an increase in volatility. Gold's outperforming most risk assets. I expect that to continue, and we've had a bit of a reprieve. So this is a place to reset. People who came in off sides or way over light long, you can add to those longs, or you got a chance to sell those risk assets. If we continue to higher, we should be fine. But I look over at that long bond today at 5%. I think a lot of people said, "Thank you very much. I'll take some of that."
So I was just thinking about this as we were talking about industrial stuff, and this is more maybe for both of you, but more for Scott. Like, do you guys remember a couple weeks ago when Spain and Portugal lost? Like, almost everyone lost power, right? And someone in the trading room here said to me, "Oh, I hope I hope they weren't expecting to be able to use their Bitcoin, right, as like a currency." Is there any? I mean, obviously you can have it offline, right? But
there's still ways, and they have mobile and all those things. Yeah. I mean, it's funny, but like try to use your bank, PayPal, Venmo, Cash App.
No, I guess it's comparing to gold, like something physical like cash.
Oh, right? Yeah. Well, I mean, good luck going to open the electronic vault where your gold is sitting. I don't know. It's an endless regress of arguments, unless it's literally buried in your yard, and
you mean you don't bury it?
Now, listen, I had a very compelling conversation with a guy the other day, which will be out, I think, next week, but about quantum computing and the problems that will definitely cause for all of these things. And that is very real. The electricity going out, I'm not too worried about.
Yeah. And speaking of which, that's another conversation that's fascinated me here is the idea that if I forget which chip it was, but it's calculated something in like a minute that would have taken thousands of years or whatever it was. But in my mind, I'm thinking, oh, great. So they're going to be able to hack every account that I have online, including crypto accounts, in milliseconds.
Quantum is a problem for crypto and Bitcoin, but it's a bigger problem for cryptography and, I don't know, the nuclear codes and the banks and literally everyone. So it's a bigger problem than I love.
So bury your gold in the backyard.
Yeah, maybe it's time to actually buy the physical gold and make sure you don't need electricity to get it out.
I like that.
Well,
all right,
but you pointed out what central banks are doing. They're buying gold.
They are.
So to end out Market Mavericks, we got about a minute left. Talk me through what are the key things to watch here in the coming week. I mean, let's say we do Market Mavericks next week. Are we watching any economic data, inflation, Trump, obviously, Truth Social posts? But like, what are you guys mainly watching?
Watching Trump's socials.
The number one factor is, will the S&P 500 be higher or lower? If it's lower, all the dominoes tumble. If it's higher, we're fine. I've never seen the systematic risk here in risk assets like S&P 500 Bitcoin is extreme. And sometimes you just say, thank you very much. I'll sit around in cash and watch it in gold and hope it's okay. Because if it's up, everything is fine. If it's down, what's happening in China. Normal deflation from the inflation.
Gotcha. And I'll full and fair disclosure, I'm pretty heavily short the market as a short-term trader here on the NASDAQ. So we'll see what happens by next week, see if I make some money or lose some money. All right, gentlemen, thank you so much, Scott and Mike. Appreciate you guys. Make sure to follow these guys on their socials. You can see them below, and hope to see you all next week. You guys have a great one. Thanks again.
Thanks, guys. Bye.